Good afternoon. Welcome on presentation about Q3 results of ASEE, which were published yesterday. Let's traditionally go first to highlights and I will comment in few words what happened in Q3. Most of comments will be specifically about Q3 only. During Q3, we decided to book significant non-cash write-offs and revenue reversals related to India and Emirates. It impacted on operating profit, not non-cash, but operating profit minus 7.5 million euro. And obviously, it affected also payment business unit. The reason for this is underperformance of operations. We already mentioned this after Q2 that we see some challenges and issues. But in a moment, I will explain what exactly we have written off. When we exclude those one of non-cash bookings, current operations delivered solid EBIT growth. Year over year for Q3 only, it is 21% above 2024. Nevertheless, in payment, we have slowed down, and it is driven by three major areas. First is slowdown in enterprise e-commerce business in Turkey. We already mentioned to you after Q2 that one of our clients, enterprise clients, switched majority of transactions to his own payment gateway, in-house payment gateway, and it also started during Q3 to happen for another big client, who it's not to the same extent, but he started to switch transactions in-source. And this directly hits revenues and impacts operating profit. After excluding one-offs, those write-offs I mentioned in India and Dubai, we have a weak performance and drop year over year. Last year, results generated contributed positively, and this year we have negative impact, which results in a decrease in payment. And only in Q3, I'm not talking now about year-to-date figures, but in Q3, deliveries of POSs and ATMs, they were lower than previous year. But if we look accumulated, revenues are there, but we have pressure on margins, especially in POS-related services and on deliveries which are done in Western Europe. From positives for payment, it was stronger quarter for direct-to-merchant clients like ECR and IPD. Here we have revenues growth. More I will show in a moment. Significant improvement we realized in dedicated solutions. EBIT is significantly higher, and this is mostly thanks to deliveries of our own proprietary solutions targeted to utilities, mostly in this area. And it was another good, in fact, very good quarter for banking, especially for core and channels business lines, thanks to own services which we delivered. And this was the best quarter for banking for last few years. For cash, year-over-year cash flow improved significantly. I would say it is back on track after 2024 issues we had, and the conversion of EBITDA to operating cash flow on last 12 months view is really on a good level. And traditionally, we show some numbers about transactions, how many transactions we process in e-commerce, IPD, and processing. For processing in IPD, it looks good. For IPD, even very good. So growth year over year. We have slowdown in e-commerce, which is due to Turkey. Yes, so those two banks which switched part one, in fact, majority of transactions to in-house solutions, it affected this year-over-year value. On other markets, for other clients, we see some growth, but it cannot compensate those drops. Okay, so let's move to results. This slide, those of you who participated in previous calls or looked at our presentation probably know pretty well. This shows numbers as they were reported in financial statements. So two first columns exactly what is there, and then another two is after excluding effect of IAS 29 bookings, so hyperinflation. And those numbers show slight drop on revenues and pretty big drop on operating profits, almost 30% year over year. But this drop, as I already mentioned, was generated by those write-offs and reversals. So if we look at them, we have revenue reversal in India, which relates to accrued but not invoiced revenues to merchants, and due to situation of those clients, the entity is not able to invoice those revenues as they will not be collected, and so we decided to reverse those revenues. Then we have some write-off of assets, 1.7 million on operating level and additional 1.4 on in financial activity. This what was put through financial activity is write-off of deposits which were frozen by enforcement directorate in India. And in operating profit, we have some write-off of some receivables plus blocked cash. And then we have more accounting things like on consolidation level, this I mean. So write-off of assets which we have recognized during allocation of purchase price. So we recognize on that time two, let's say, families of software, one for payouts and second for payment gateway. And the one for payouts we decided to cover with allowance. And write it off to zero as we don't see perspective for now for recovery to recover this value. And the last column is effect of goodwill write-off and reversal of earnout for majority stake, which we looking at results we don't expect to pay. Taking all those adjustments, one-off, I will underline non-cash one-offs. Adjusted figures are in this, let's say, second section of the slide. And we can see here that on adjusted level, we have increase of revenues by 2% with some change in structure. You will see this on later slides. We have drop in POS and ATM on deliveries, so third parties. And also in dedicated solution, we have change of structure, drop in advanced infrastructure, so lower deliveries of third-party solutions and increase in own solution. On operating profit, 21% growth year over year. so pretty good. And on net profit, it is less, only 1%. What is the reason for this gap between two levels? It's mainly due to effect of restatement of contingent considerations and mostly put liabilities, of course, other than India and Dubai. So this year, our liability resulting from put of minority shareholder of Dwelt in Bosnia, the valuation of this liability increased by 2.8 million euro, and this is related directly with better performance in Q3 and expected better performance for next quarters. You will see this in a moment on slides by geographies, how big improvement in Bosnia we have. Additionally, last year we had positive effect of revaluation of put options for BSTS and BitHat, which we don't have this year. So those two things in total is around 5 million euro lower result. It's our bigger costs. This was partially compensated by two items. One, interest. On interest, we have higher balance, positive one, 200K, and previous year we had 1 million euro of costs related with dividends declared for non-controlling interest, which did not happen this year. To remind, some of entities are consolidated using present ownership method, and in this case, when this method is applied, dividends paid to minorities land in P&L of group. And as for taxes, here it is positive. We have taxes lower by 600K comparing to 2024 Q3. Two main reasons. One is tax benefits on R&D, which we accounted in Spain. We submitted, of course, documentation to utilize them, and lower tax on intragroup dividends. Those which we collected during third quarter were not covered with withholding tax or local taxes, and effectively we don't have this in P&L. For P&L figures, I will not go into details. The same pictures, similar year-over-year differences. So no need to comment. Let's move to business lines. How this looks. So in paytime, in paytime we have drop of revenues year-over-year by 3.3 million euro. And drop of operating result. But a few words about revenues first. So as I already mentioned, in ATM and POS we have lower deliveries, and this is visible here. So on ATMs we have drop 3.4, but when we look at year-to-date data, we have growth. And similarly with POSes, but the difference is in POSes margin on deliveries, especially in Western Europe, is shrinking. Then for e-com and processing, dropped by 1 million euro, which is a mixture of three items. Slowdown in Turkey, I already commented. Transactions switched to in-house solutions by two banks. Significant drop in Dubai and India. Last year in Dubai we had some implementation projects to enterprises, to banks, and in India we did have revenues to some merchants, but those for whom we later had to reverse revenues. And in India, currently dropped to very low result, and we are rebuilding it again almost from scratch. Those things were compensated by increases in some other geographies, so net effect is dropped by 1 million. And ECRs and IPD, I already mentioned that it's pretty good quarter for those lines and growth 1.8 million euro year over year, mostly in Southeastern Europe, Croatia, Serbia, but in lower scale also Western Europe and Central Europe. Specifically Romania. As for operating profit, as you see, more or less half of result was generated by e-commerce processing and ECRs, and we have drop of result in e-commerce in processing. It relates to Turkey, India, and Middle East, so exactly the same geographies where we have drop of revenues. In ATM, we have drop of operating profit a bit due to those deliveries. 3.4 million lower revenues, also decreased margin, and also weaker performance of independent ATM network MoneyGet, especially in Albania. And in POS also small drop of EBIT 300K, mostly related to lower deliveries. Overall, coming back, 2.7 million euro lower result in payment, of course, excluding one-offs. And then let's move to ASEE part. So banking, I already mentioned spectacular quarter for banking, almost 4 million euro higher revenues year over year, and result higher by 2 million, reaching more than 5. So the best quarter for since I think 5 years. And this is delivered mostly by Serbia, Macedonia, and in a bit lower part by Romania. And it's thanks to core solutions and channel solutions. And dedicated solutions, only 1.3 million euro increase of revenues. But we have this change of structure, so decrease of third-party revenues and increase of own revenues. So cost sub business line, where we have big operating leverage on this, and result is transferring to operating profit, as you can see, because we did have already resources available, and now we utilize them effectively on projects. So the base was not, let's say, ambitious, and it was not easy to beat, but the increase is pretty nice, and it allowed us to reach this 18.3 million euro operating profit. As for the geographies, few words. The biggest growth we have in Southeastern Europe. This is the strongest region, 4.7 million higher operating profit, mostly Bosnia. So I already indicated that this is related with this dual and valuation of put option. Also good Macedonia, thanks to banking, and Central Europe, also thanks to banking. A bit of slowdown in Western Europe, but if we look a bit more into detail, we have growing e-commerce here and ECRs, but slowdown in traditional post-related services, apart due to drop in deliveries, and also those which happen there with lower profitability than previously. And three geographies, let's say problematic ones. So Turkey, already said few words. So we have drop of revenues due to transactions, and which were switched to in-house solutions, and this is transferred to to operating profit. Previous 2 years, we had a perfect example of positive operating leverage when transactions were growing. We could easily generate higher results, and now with dropping one, it affects operating profit quite much. Okay, we initiated here a process of cost optimization. We work how to adjust to new reality, but we need a moment to see results of those actions. And India and Dubai, I already mentioned that business shrinked significantly. As you see, 200K euro revenues only in both geographies. So this results in operating loss this year and even bigger drop year over year, because last year India and Dubai contributed around €500,000 positive together. Okay, so this is about Q3, and moving to year-to-date figures. I will not go too much into details because picture is pretty similar. When we look at total year-to-date figures before one-offs adjustment, we have growth of revenue by 7%, drop of EBIT by 4%, and net profit by 15%. And again, here we have effect of those restatements or revaluation of put liabilities and contingent considerations. We have from Q1 one of loss generated on sale of Mobven, and the differences on taxes, which were on year-to-date numbers, they are higher than in previous year. Looking at adjusted numbers, asset write-offs, PPA, and goodwill adjustments for one-offs are exactly the same. The first one, revenue reversal, is different. It's 1.6 million, not 4.1. And this is because the difference, so 2.5, was reversal of revenues we recognized in Q1, Q2 this year. Yes, so on year-to-date figures, it has no impact. When we look at adjusted numbers, 7% top line growth and 10% on operating profit. So we have operational growth on current business. Net profit -9, and due to those reasons which I mentioned a moment ago. When we switch to results by operating segments, again, pretty similar picture. Yes, so we have growing banking and dedicated solutions. In banking, H1 was slightly positive with small growth. Now we've added a spectacular Q3. It looks very good. So accumulated 2.4 million euro operating result growth on core banking and solutions and channels mostly, as I mentioned. And dedicated solutions here on accumulated data, we have on revenue even drop year over year due to third parties again, and increase in own, and 6 million euro higher result, reaching more than 4 million euro. So it looks good. This Q3 was really strong and contributed to accumulated numbers. And Payten, last one. So on year-to-date figures, we have growth in revenues in payment. This I already highlighted before. And as you see, this growth is in all lines, despite challenges we have, especially in e-com and processing, where we have this drop in Turkey, India, and Dubai. Still, it contributed to the growth of overall Payten. When we talk about operating profit in POS, we see this pressure, especially in Western Europe on margins, and we have drop of operating result. ATMs, we have drop on profitability of independent ATM deployment. We can say it is the same, like one-to-one as in Q3, as most of result for this network is done during Q3. So here we have drop of around 1 million euro, growing ECRs and IPD, and big drop. Most of the total drop of result is in e-command processing. Why Turkey and India and Dubai? So let's look at how it looks by geographies. Again, very similar. So strong Southern Europe with growing Bosnia, but also growth for Croatia, which was not the case only for Q3. Macedonia, the same trend, so growing on cumulated data, and Central Europe as well. Western Europe, you see here this drop of result by 1.3 million euro, and this is related with POS and shrinking margins, what I already indicated a few times. And then the biggest drops year over year we have in Turkey due to the reason I already mentioned, and also India and Dubai. So this is about results. Now, a few words about cash flow. I already mentioned that we are satisfied with cash flow. It looks good. So operating cash flow for 3 quarters is almost 39 million euro, what is significantly better than previous year. Okay, last year was bad. We were struggling, and so it looks we are back on track. When we look at last 12 months figures, 74 million euro operating profit, more than in 23. So looks good. When we calculate conversion of EBITDA to operating cash flow, but EBITDA not the reported one, but adjusted for one-offs, the higher one, conversion is 93%, what seems to be very good. We had a lot of investments, mostly in infrastructure for outsourcing and on networks. Last 12 months, we invested 15 million euro. This is mostly for POSs and ATMs. For existing contracts, those which we signed a few years ago, 5, 7, 9, on which we reached this phase of renewing the fleet and replacing with modern devices. So as you see, comparing to 23, 24, we had big investments. Now 25, we also have them big. What is lower are spendings, investments in M&A. We have significant drop. We bought only 2 small entities during this year so far. And as for other outflows like regular capex, it is pretty stable and nothing surprising here. When we look at liquidity situation, cash 53 million euro. So this is drop year over year, but we need to remember about those dividends. Okay, we had operating cash flow positive 40 million, but we paid the dividend to ASEE shareholders, but also to non-controlling interest of subsidiaries. It's like 21 million euro roughly. Capex 15 million euro only this, 15 million euro total year to date, M&A expenditures and servicing of debt. So this consumed some part of cash. Other positions like short-term debt, short-term leases, dividends, nothing spectacular here. It's pretty flat. We have huge increase in short-term M&A liabilities. This valuation of contingent considerations plus put options, mostly puts currently. And it's not that the most that we have some new ones. Simply those which were previously presented as long term, they are now falling into this 1 year gap, and the biggest amounts or biggest options in this amount are this related with Dwell, BSTS, Necom Plus, and Iften Pay. This is majority of the of this value with some other smalls. As for operating capital, I don't think there is much to comment. Okay, this was what we managed to do, what we were like, let's say, expecting and highlighting on previous calls is that we want to decrease a bit inventory, and we managed. Okay, so this is it. And as for outlook for Q4 and till end of the year, backlogs look good. And so we have a 20% increase of backlog on whole asset for Q4. For ASEE part, so banking and dedicated is 36, and lower for payment 6. Probably if you remember previous year or last 2 years, it was rather opposite situation. We had more dynamic backlogs in patent. Now it's changed. Quite big impact on this is coming from Turkey and the switch of transaction, which we mentioned. And in ASEE part, we have increase, which is mostly from dedicated solutions. Okay, but banking is growing as well, but the majority of growth is in dedicated. Okay, so this is about results. Do you have any questions? You can put on Q&A, you can put on chat, or maybe raise hand as well and ask. As for this India and Dubai, so like answering one of questions we did have on our morning call in Polish. On level of entities, we don't have any more big exposure in assets. Most of things are already written off. Of course, some assets are, but not major one. We have still exposure on group level, but on non-cash items. Yes, like we have around 6.8 million euro goodwill, which is still on our balance sheet and not written off, and we have 1.8 million euro valuation recognized PPA as this another software payment gateway. Based on impairment tests which we prepared, we still see potential to recover this value. So for now, it is left on balance sheet. And of course, we have this challenge to rebuild the business and to get new clients to first cover operating losses. As you saw in Q3, it was minus 900K. Okay, I expect Q4 it will be lower, but we need to catch this, so get new clients. For sure, what we changed in the approach is that we are now very strict in revenue recognition in India for merchant business. We don't allow literally any recognitions which are not invoiced to the client, and we have implemented very strict policy for writing off merchant receivables. This mostly relates to India, but for Dubai as well, if we have this type. So after 90 days, such merchant receivable is fully written off if not collected. Monica, Charles want to ask a question, I think. Could you help with?
It's possible. Yes, the voice
It's possible. Okay,
Great.
so
Hey guys, can you hear me?
hi. Yeah.
Great. Yeah, just to follow up on, I don't admittedly don't totally understand exactly what happened in Dubai and Turkey. Are we talking about the same? Is this the same thing as the Mobvin issue? And what was it? It was just aggressive accounting. Was it
No.
was it
Okay.
more than that? Was it
No.
fraud? Okay.
Okay, so let me do one by one. So first, Turkey. What happened? We have we have like 4 or 5 major clients in this enterprise enterprise part of payment gateway in Turkey. So our clients are big banks in Turkey for whom we process transactions. And 2 of those banks decided to build their own payment gateway solution in-house. It's not that they switched to competition. They simply built in-house solution and switched transactions from us to their internal payment gateway. So we lost transactions which were processed by us, and we lost our commission, which we earn on each transaction processed. Is it clear? Am I clear for Turkey?
That sounds like standard operational, problems. It doesn't sound
and
like
we
a
don't treat
write-off.
we don't treat this as write-off. It's this explains operational drop of results in Turkey. So here we are not adjusting anything. Just explanation why Turkey is lower. Yeah, so if we look here, we have this drop on Turkey. This is due to this.
Got it.
Okay, and now India and Dubai. So in India, we have different issue. Which is also trust related. As you remember, like previous quarters, I think since Q4 results, we were always mentioning collection of receivables is an issue. We are looking at this. We are worried, and we apply our policy, standard policy, and we did it. But what we have figured out that, and this somehow touched trust, the manager and the seller, they run the business which was very aggressive. So not direct clients of India operations, but indirect clients of clients were in high risk merchants. And on India level, there is increased pressure on government level for limit to ban such things. And our clients fall in problems because they were hit by doing business in those areas. Yes, they had they fall in problems, and our India companies are not able to invoice those revenues to them. They were accrued only, so they were now reversed. So this is what happened. So we don't have business with them anymore. And we try to rebuild. We rebuilt sales organization, hired new sales, and try to get new merchants from those non-high risk sectors, and step-by-step rebuild this. But as you see in Q3 numbers, starting point is very very low. Yeah.
Okay.
And so this is about revenue drop, and for write-offs, yeah, there was some. Again, it's like related with clients, and there was some control, and they blocked funds. Our managers says they should be recovered, but it's already a few months and they were not recovered, so we prefer to be on safe side and write them off. Based on information we gathered through different sources, it can take years to recover them. Yes, so we don't see such an asset as having value. So we want to be conservative, and we include write-offs.
Okay. And is this the same thing that happened in Dubai?
In Dubai, not. In Dubai, because in Dubai, majority of business is enterprise business. Yes, and currently we are struggling with lack of projects. There is no projects at all, or very minor. So this is the main problem. And there is a problem which we mentioned already a few times: collection of old projects from 2024 and end of 23, where we have open receivables. All those things which are still not collected are covered with write-offs currently, and okay, we push them to collect. So if it will happen, if we manage to collect, it will have positive impact.
Got it. Okay. So these sound like these will be lapping issues for next quarter as well. Is that right?
Okay, I expect next quarter to have operating loss on this, hope lower than in Q3, this excluding one-offs, but I hope there will be no ones. But okay, I already disclosed what is still exposure on goodwill and PPA. So if there will be some thunderstorm scenario, something goes even worse, then we have still this exposure. Yes. But for now,
okay.
Our best judgment is it will not happen. So we still left those assets. Yes.
Okay, that's helpful. And then maybe one more on a more positive note, the growth in free cash flow is really impressive. Can you talk a little bit about where that's coming from and whether that's a conscious new effort to improve cash generation, or if that's maybe just a seasonal kind of thing that just happened by chance?
Oh, always this mixture. Let's be fair. Yes, let's be fair. There is seasonality, there is luck, and there is also this constant pressure on cash, which we implemented on reviewing exposures on projects and pushing for invoicing, closing them. Also, we have we released 10 million euro from inventories, so trying to keep more under control, buying upfront POSs and ATMs, because it's mostly this part. Yes, POS and ATM mostly. We always need to have some stock. It's necessary in this business, but yeah, last year it was a bit too much. We have few projects where we are currently in delivery with recognitions done, but not invoicing. I hope some of them will be closed and invoiced till end of the year. So Q4 should be good as well. I hope.
Great. Yeah, it's great to see. I've got plenty of other questions, but I'll hop in the queue and let others ask. Thanks.
Okay, thank you. Any other question? We have something on chat, I think. Let me see. constellation and will this result in any changes, particularly regarding management compensation? We are not aware about any changes right now. Of course, we know about the constellation and that it was closed. They have this cooperation agreement with Adam Gural Foundation, but for now we are not aware of any specific changes and impact on management compensation model. Key points raised during morning presentation in Polish. Okay, so the say about India, Dubai, I shared. Okay, about Turkey, how we want to address Turkey and this drop. So short term, like very short term, we are not able to match this, but we take two actions or two areas of actions. So on top of this enterprise business, which was so far the biggest in Turkey, we have also direct to merchant business in Turkey, in running two models, one under financial institution license, another without license, and we want to both are growing, and we want to push it even more to grow, and so to grow with bigger amount but of lower clients, smaller clients. Yes, so to have this bigger. Let's say to have lower exposure on one big client. So this is one area, and second, we already started. We are working on cost optimization in Turkey, but effects of this cannot be expected in Q4. It's it will take a few months to shrink the team and adjust to lower volume of transactions. So this is it. What else was asked for me to recall to? Okay, growth of backlog in dedicated solutions. Can we expect this to continue next year? So growth, yes, but the percentage-wise, it will be difficult, and because the base is growing. Yes, so we see projects for next year. This should generate some recurring revenues of maintenance once projects are completed, but we can not expect the same percentage dynamics as this year. Yes. As for profitability, so Q3 it looked already nice. So it is here. You see it was 12%. Year to date is 5%. So we see still some area for improvement of profitability and performance in dedicated, but we don't see area to reach levels as banking. Yes, these are different type of softwares, very often offered to public, where we have price pressure. So there is place for improvement from 5 which we have, but not to the where it is here, from this 5, but not to the level of banking. Okay, so this what else? How can I help? Any other question? Okay, we have question. What do you expect to be your main growth driver of banking solutions in next year? Cost efficiency. talking about operating profit, we really want to put bigger focus on efficiency and cost of the of teams. So we see here some potential for improvement. As for projects top line, rather we don't see big projects, big, huge core banking implementations as we did have in 2023-24. And this I don't think can happen, but small projects, different smaller modules, yes. So, but we see here area for cost optimization, and we also initiated works in this area. We put this as a part of budgeting exercise, which was initiated recently, but we need a moment to complete this. And increasing sales in 2 years. Next year, I think we still have place in dedicated solutions to grow banking. Some increase, but nothing major. And with payment, okay, the starting point for India, Dubai is very low, but we don't build much on this. We'll push, but let's see. In payment, we see potential for growth in those direct to merchant lines. So ECRs, IPD, and e-com, and this is where we want to really to focus and try to add additional value-added services to our existing clients. So to utilize this clients base we have with adding additional service. We are intensively working now on this and hope that some pilots will start soon in some new geographies. So this is like on existing cost base, adding additional services, what should be like quite effective in terms of profitability of this additional service. So yeah, for this traditional POS and ATM business, here we don't see like some big place for growth, but also we don't expect some huge drops. Yes, okay. Pressures on margins is there, but we want to also look at costs and try to address this somehow. So in overall, like to summarize, in dedicated solutions and direct to merchants lines in payment, these are those areas where we see the biggest place. Positive banking growing, but not some very big growth. Okay, anything else? If not, then I invite you to one-on-one direct contacts. We are now after a closed period. Another closed period will start. I don't know exactly when, but usually around 20th January. So we have pretty much time to talk next to 2 months easily. So whenever you have questions, you can reach Monika, Piotr, myself, and we'll be happy to have a one-on-one call or meeting if you will be in Warsaw. We have one more question. What do you expect to be the most transformative trend for the banking solutions? It's tough one, honestly, but I think still all what is related to digitalization of relation with clients. This is where we see. So this what is presented in our case in channels business line, and this is the place where we see place for like replacing with new modern solutions. We've embedded some AI functionalities for which we have competence in our group, and we try to combine this and sell together, like new CRM, for example, for banks. Good. So thank you a lot. One more time, if you have questions, please reach us. We'll be happy to meet and talk. And thank you for joining. Bye.